Welcome to California Bar Prep, your study companion for the California Bar exam. In this lesson, Community Property Overview. Let's begin. Community property is one of the most California-specific essay subjects. The central question is characterization. Is an asset community property, separate property, quasi-community property, or mixed? After characterization, ask who managed it, whether a fiduciary duty was breached, and how it is divided at divorce or death. California is a community property state. Under the California Family Code, property acquired during marriage while domiciled in California is presumed community property. Property owned before marriage, acquired during marriage by gift, bequest, devise, or descent, and rents, issues, and profits of separate property are separate property. Property acquired while domiciled elsewhere that would have been community property if acquired in California is quasi-community property and is generally treated like community property at divorce and for certain death rules. The exam loves timing. Classify at acquisition, then track later changes. Marriage starts at the date of marriage and ends for earnings purposes at permanent separation, which under Family Code Section 70 requires a complete and final break in the marital relationship plus conduct evidencing that intent. A later transmutation, commingling, loan payment, or improvement can change rights, but does not erase the starting point. Community property presumption. All property acquired by a married person during marriage while domiciled in California is presumed community property. The presumption may be rebutted by tracing to a separate property source or by showing acquisition by gift, inheritance, or other separate means. Separate property. Separate property includes property owned before marriage, property acquired during marriage by gift, bequest, devise, or descent, and rents, issues, and profits of separate property. A spouse may manage and dispose of separate property, subject to fiduciary obligations and family support rules. Transmutation. A transmutation is an interspousal change in property character. For transmutations after 1984, California generally requires an express written declaration made, joined in, consented to, or accepted by the spouse whose interest is adversely affected. Casual oral statements are not enough. Equal division at divorce. At dissolution, the court generally divides community property equally unless a statutory exception applies. Separate property is confirmed to its owner. Debts are also characterized and divided, with special rules for debts incurred before marriage, during marriage, and after separation. Characterization method. Identify the date and source of acquisition. Apply the community property presumption if acquired during marriage. Ask whether separate property tracing rebuts the presumption. Determine whether any title presumption, transmutation, or statutory special rule changes the result. Address apportionment if both community and separate contributions exist. Commingling and tracing. Commingling occurs when separate and community funds are mixed in one account. Commingling does not automatically convert separate property into community property. The spouse claiming separate property must trace to a separate source. Common tracing methods include direct tracing and family expense tracing. If tracing fails, the asset is usually treated as community property. Management. Either spouse generally has equal management and control of community personal property. Both spouses must join in transfers or encumbrances of community real property. A spouse operating a business may have primary management of that business, but owes fiduciary duties. Spouses owe each other duties of highest good faith and fair dealing in managing community assets. Community property versus quasi-community property. Community property is acquired during marriage while domiciled in California. Quasi-community property is acquired while domiciled elsewhere, but would have been community property if acquired in California. At divorce, quasi-community property is divided like community property. At death, the surviving spouse receives protections, but the owner spouse may have testamentary power subject to statutory limits. Form of title versus source of funds. Title matters, but source often matters more. California has special title presumptions, including form of title rules and Family Code Section 2581 for property acquired during marriage in joint form for divorce purposes. Joint title can create a presumption of community property at divorce, subject to written agreement or clear statement in the deed. Divorce versus death. Rules can differ. Some presumptions, including the joint form presumption under Family Code Section 2581, are dissolution rules and may not apply identically at death. Always state whether the dispute is between spouses in divorce, between a surviving spouse and estate, or between creditors and spouses. Do not say wages earned during marriage are separate because deposited into a separate account. Earnings during marriage are community property unless after separation. Do not ignore post-separation earnings. Earnings after permanent separation are separate property. Do not treat inherited property as community merely because received during marriage. Gift and inheritance are separate property. Do not forget reimbursement rights when separate property pays community obligations or community funds improve separate property. Do not assume oral statements transmute property. Modern California transmutation requires an express writing. Do not forget fiduciary duties between spouses. Concealment, self-dealing, or unauthorized gifts can trigger remedies. A common essay gives spouses who marry, buy a home, refinance, use inheritances, run a business, separate informally, and then divorce or die. Use an asset-by-asset format. For each asset, write initial character, any change or apportionment, management issue, and division. For a house, identify down payment source, loan payments, title, and improvements. If bought during marriage with community earnings, it is presumptively community. If separate funds were used for a down payment and title is joint at divorce, discuss Family Code Section 2581 and possible Family Code Section 2640 reimbursement for separate contributions absent waiver. If a separate property home is paid down with community earnings, apportion community and separate interests under California formulas. For a business, identify when it began. If before marriage, it starts separate, but community may gain an interest from community labor during marriage. California uses Pereira and Van Camp apportionment depending on whether growth is mainly due to the spouse's skill and labor or the inherent nature of the business and capital. Strong answers show California precision, avoid global conclusions, and separate characterization from division. That's it for this lesson. Download California Bar Prep on the App Store for lessons on all 14 bar subjects, practice questions, and essay frameworks. Keep studying, and good luck on the bar exam.